Markets just made history. The Dow Jones closed right above its record high for the first time in 2025. And that surge came after Fed Chair Jerome Powell gave his much anticipated Jackson Hole speech. And make no mistakes, he gave investors exactly what they were hoping to hear. The doors open for a September rate cut. Stocks ended up ripping higher. Pretty much today was the everything rally. Stocks ripped higher, treasuries rallied, Bitcoin rallied, and the S&P 500 and NASDAQ both bounced after pretty much a rough week. But the question now lies, is this the beginning of a new leg higher for markets, or just a temporary relief rally before we see more turbulence in the markets? So let's break this down. So markets overall were carefully calibrated, watching for how Jerome Powell is going to react to all the anticipation around his Jackson Hole speech. And he admitted the labor market is weakening. We've seen payroll growth has slowed to just 35,000 jobs over the past quarter compared to 168,000 a year earlier. And he said downside risks for the employment rate are rising. And that's Fed speak for if job losses begin to continue piling up, they could happen pretty quickly. And that line alone was enough to reassure Wall Street and everybody watching that the Fed is ready to step in with support, given that we need it, and we might not be too far away from that. Now, on the other hand, Powell didn't necessarily give markets a blank check. He did warn that tariffs are still pushing inflation much higher, and while he sounded more confident that those price increases could be temporary, it's funny though, because he was like, at the last meeting, y'all are lucky we're not raising rates because of tariffs, and now it's kind of a completely different spin. He left plenty of wiggle room, is how a lot of people are putting. He stressed that policy is not on a present course, meaning that don't expect a rapid fire series of cuts. Instead, think of this as a one potential cut in September followed by a cautious wait and see approach just going forward. Now, why does any of this matter? Because markets were nervous heading into Jackson Hole, because before Powell spoke, stocks had been down for 5 straight sessions, mainly looking at the NASDAQ and the S&P 500, their longest losing streak since back to January. And tech in particular have been under pressure, sparking worries that, oh no, we're at another .com 2000 style bubble unwind. But Powell's tone calmed those fears, at least for now. Still, not everyone is convinced that this rally has legs. Analysts like Chris Watling point to red flags. Trading volumes are pretty light, valuations are stretched, and single stock call option activity is hitting peaks we've only seen before big pullbacks. In other words, there's froth in the system, and history shows September is the weakest month for stocks on average. So we're at this crossroads. On one side, Powell has given the markets oxygen with the prospect of rate cuts. And then on the other side, speculation is running hot. Tariffs are inflating costs and consumer spending is starting to show cracks. Which side wins will depend necessarily on the next few data points. It's an endless cycle of watching this data, and especially with the August jobs report and the Fed's own projections in September. So now it's pretty much a wait and see from here. So here's the bottom line. Powell gave the market what it wanted, necessarily a green light to continue rallying. Hey, we're going to cut rates in September. But after that, it's going to get a little bit different from what y'all are expecting. But with strings attached is what we've seen regarding these Fed rate cuts. Rate cuts are back on the table, but the Fed isn't promising a new era of easy money. If the labor market keeps softening, the September cut is almost certain at this point, as high as 90% as of right now. But if inflation proves sticky or tariffs hit harder than we're expecting them to, the Fed will tread much more carefully as far as their rate cut approach. So this is a moment to stay sharp. Rate sensitive sectors like real estate and small caps could benefit if these cuts come through and really save the day, but the red flags of speculation and seasonal weakness mean we could see volatility pick up as we head into September, which, remember, is a a tough month for markets. So I'll be tracking the move from Powell and the Fed. So make sure you're here with me. Stay tuned, and remember, in markets like this, headlines create excitement, but discipline creates wealth. Great luck out there, everybody.